Hey guys, as promised, I was going to start doing these option updates on Monday, and I was going to give you a whole 5 week update of the previous week's trades. It would just make it a lot easier to go Monday through Friday, since Fridays are typical expiration dates, and you'll know what got assigned. Also, what's going to be happening in the coming week, what I'm looking for, etc. So I think this is going to be a lot more cleaner. Although this one's going to be a little bit dirty, mainly because I already did part of this week on this last video. So this is going to kind of intermingle, and the numbers are going to look funny. But I mean, the numbers aren't doctored, but I'm just saying, when we get to the premium cooking side, you'll see what I mean. But from here on out, it's going to be fine. I just didn't want to go back and refigure it and all that stuff and do a bunch of accounting. So we'll just go from here out, 1 week at a time. So for those that are new here, I share 5 days of trades, and now it's going to be the previous Monday through Friday. Buys, losses, rolls, assignments, all that good stuff, expirations, if any, and we'll just go through it. So to begin, we're going to start with what we closed for the week starting May 9th, I believe is the first day. Yep, May 9th through May 13th, which was Friday the 13th. So May 9th, I closed a QQQ put. It was a 300 strike, closed it for $9.49, realized $800 loss on that one. But I rolled it. That's one of these ones that I talked about on the last video. So this is a repeat. QYLD, I was early assigned on my $20.50 strikes, 4 contracts. So I bought 400 shares of QYLD, added to my 600 shares or 500 shares that I already owned. And I'm fine with that. So this got exited at 100% profit on the option contract at least. So $125 there. On Friday the 13th, I shut down Micron at 38 cents, profited 61.74 there. Before the expiration, I was just trying to lighten the load, and you'll see why when I get to where I look at what's expiring this week. Intel, shut that down for 50 cents, profited $40 there. And then if you guys recall, I did a ARK-K1111 trade where I bought a debit spread, and then I financed it with 2 sold puts. So this was the debit spread here, which was a 45 and 43. I bought those back, and I bought the puts back as well. So all 6 of those I bought back as well. So netted about 80, I think it was about $86 on this trade of ARK-K. It's a downside trade. I've done a couple of videos on it. I'll probably reference it down below as well. So I closed those out. And that is it for the closings for the week of May 9th to May 14th. Now let's look at what we opened. So we go down here to May 9th, and I said I closed that QQQ put for a loss of $800. Well, I sold a June 17th 298 put, and I collected $1,424 for it. I always forget to remove these fees because they just get in the way and get confusing with all these numbers. So I sold 1 contract out to June 17th, 298 strike, collected $1,424 for it. On May 13th, Friday the 13th, I sold a put on MPW. That's the Medical Properties Trust. Sold a 17 strike. This would be a 52-week low for the company that pays about a 6.5% yield, and I got $45 for it. I'd be happy to own at 17. Medical Properties Trust. That closes in June 17th. Dutch Bros. We're going to talk about Dutch Bros because I got a Dutch Bros open. We'll talk about that on my weekly forecast here of expirations. But I sold a Dutch Bros missed earnings, or they didn't miss earnings. They actually just lowered guidance just slightly, and the market punished the heck out of them. And so I went in and I sold this Dutch Bros put that expires this Friday. Sold a 25 strike, and I got $88 for that one. So I'd be happy to buy at $25. And then I sold Intel out to June 17th. I just basically rolled the one I closed out to a later date. Got $144 for a June 17th 4250 Intel put. So those are all the openings. Let's take a look quickly at Premium Cooking. So you'll see right here, I got a couple of asterisks here because I just did a video at 5:10. So we're going to change it now. We're going to weekend Friday, and I changed it to 5:13. So this is these numbers are representative of the week of May 9th through May 14th. You can kind of just disregard this, the 5:10 line, because some of this is included in that, and some of this is included from the week before because we did midweek. So I hope that may all make sense. But the week of May 9th through May 13th, we closed down 5 positions. We opened 4. Profit realized of negative 489.65. That's because of that roll of the Qs we did. Sold premium 1697.89. That was ballooned because of the roll of that Q. Total Premium Cooking now, $5,215.98. Maintenance margin, $41,000. Buying power usage of 40%. Cash balance dropped to $55,544. That's because, mainly because we got assigned those 400 shares of QYLD. No deposit. Well, actually, that should be down there as well. But basically, no deposits, no withdrawals. Net liquidation, $101,700, lowest of the year besides last Wednesday. Return on maintenance margin, negative 1.16%. Return on net lick, negative 0.51%. What those numbers represent is the profit realized for the week divided by the maintenance margin used the previous week, and the net lick of the previous week as well. So how did we do overall? How's the portfolio doing year to date overall? Let's take a look. We usually compare that against the market. Oh, one real quick word is May 20th. I got $2,900 of premium set to expire. We'll go over the outlook here after we go through the year-to-date performance. So percentage decrease, we started the year off 123,100, closed May 13th at 101,700 for a 17.38% decrease in the portfolio, but overall not too shabby considering. If we look over here, S&P down 16% year to date. I've always kind of modeled my account against the Russell 2000 and NASDAQ. So the Russell's down 21%, NASDAQ's down 25%. So for now, comfortably ahead of what I always considered were my benchmarks. And then the Dow Jones winning the value race here this year, down 12% year to date. So the difference now that I'm doing these, releasing these on Mondays, is I'm going to show you what's expiring for the week and what I plan to do for things that are expiring. And I got to tell you, almost everything I have is in the money. Okay. Especially stuff that's expiring on May 20th. And we'll go over it, and I'll just give you my thought process and what I'm thinking about. Okay. So if we look at here, everything in the red is in the money. Let's see if we can zoom in on that just a little bit. So we have XYLD with a strike of $47. Red means it will exercise to buy. That means it's in the money right now. So if XYLD is under 47 by Friday, I will take possession of those. Okay. The big one is the $57 strikes on ARK. I have 7 of these contracts. I will roll these out. So my premium cooking is going to balloon in a big way come this Friday, unless some absolute miracle happens, but I doubt that. I'm really considering reducing my contracts there and just absorbing the losses. But I don't know. We'll see. Either reduce the contracts or reduce the strike price significantly, which will lock in losses. I haven't decided yet. I have a feeling most likely what I'll do is I'll roll the same strike out a month and collect some premium. TQQQ. I got a couple of puts on TQQQ at 40. I'll probably roll these out. Same strike, 1 month out, collect the premium. SOXL in the money by a couple of bucks. I'd probably roll these out a month out. Same strike, collect the premium. DXC Technologies, that one's right there. This one could come out of the money, and I might not have to do anything with it. But I may just take those shares. TAN is the solar ETF. I would roll that out, same strike, month out, collect more premium. Ford, that one could become in the money or out of the money. We'll see, but if it's under 14 by Friday, I'll probably just take those shares. QQQJ, that's the next gen NASDAQ 100. 27 bucks. I'd probably roll that out, same strike, 1 month out, collect more premium. And there you go, bros. $50 strike I got out. I will take these shares, and like I said, I sold that other put for 25. Hopefully, not hopefully, but if I do get a sign there, that would really put my average down. But I will take these shares. Bank of America, I'm undecided here. I could roll this out. I was checking it out. I can gain another $100 or so rolling it out 1 month, keeping the same strike. I could even roll down to 37 and get a little bit of premium, or I just might take the shares. We'll see. SOXL, I have that same. I don't know why that's in here twice. I think it's because I have more than one contract on it. Same deal. Roll it out, same strike, 1 month out. Now SPLG. That's the S&P 500 ETF. I will probably take those shares. We'll see what the premium looks like if I roll it. But I don't mind owning the S&P. And then QYLD, I have a 1950 put out that will probably be assigned to me, and I will probably take those shares. But what I'm thinking about very seriously, in the near future, not sure, depends on what the market does, is I'm actually thinking of selling out of all QYLD and putting it into something that could participate more in the market upside. Because income funds, they're always going to be there, right? They're always going to produce income, but they're not going to participate in the upside. And now since we've sold off, I could probably take the loss and put it into something that can participate in the recovery and make more money, essentially. So we'll see. I'm not decided yet. We'll see how it goes. Maybe I'll just do part of it. But it's, you get a certain amount of money that you can tax loss harvest. So you could do that, but as long as you put that money into something that's going to grow more than what you've lost, then that could be a win. Because I mean, even if we do recover here, if we bounce here, which I don't think we are, like I don't think the bottom is in, but QYLD, XYLD, RYLD are not going to participate as hard, or they don't have the upside capture of the market, in other words. So if you can put that money into something that has that upside capture, you could be better off. But that's timing, and I don't know. I'm not good at timing, so we'll see. Maybe I'll just do part of it. So that is all I got for you guys. Hope you enjoyed this Monday. Let's take a look at what earnings are going to be like for the week of May 16th through the 20th. Look at the big dogs here. The big dogs, Walmart is reporting, Home Depot, Cisco, Lowe's, John Deere, Target, Applied Materials, so Colgate down there. So retail here, Target and Walmart retail reporting, that's going to be interesting. I think people are still out there spending money. That's what I see. I don't see anything different. And, I think people would be buying cars if there were cars to buy. I think consumer wise, I think we're fine. That's just my opinion. I don't see anybody out there really trying to scrimp and save, to be honest with you. I see people out there spending money. And that just tells me that things aren't as bad as they seem. So that's my opinion. Take it for what it's worth, which is nothing. Hope you guys enjoyed. We'll see you next week. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.